Hey, in today's video, we're discussing Medicare choices for federal retirees. Do you need Medicare? Do you realize that you have a choice? Let's go over your options. Coming up next. Hey, this is Mel Stubbs. I'm a financial planner at Christy Capital Management, where we're helping federal employees retire better. If you need individualized help, click right up here. Medicare is a health insurance program put on by the federal government that you have access to at age 65. Now, everyone's going to have access to Medicare Part A because you've been paying for it throughout your career. Medicare Part B is the choice that you have. Now, if you have FEHB, which is the federal health care, and you've had it at least 5 years prior to retirement, then you can retire and carry that into retirement with you. The only change will be that you're going to pay your premium with after-tax dollars, whereas your whole career, you've been paying your premium with before-tax dollars. Other than that, everything remains the same. You have open enrollment every year where you can enroll in the plan that you want. The copay remains the same, so if you like your federal health care just the way it is, and you don't want anything to change or be different about it, you can choose not to get Medicare Part B. You still make your same premium payment, the government still pays their portion. Now, if you do sign up for Medicare, Medicare becomes the primary and your FEHB will become secondary. You'll have the additional premium. You can see right here the premium amounts are dependent on your income, and we'll talk about that in a minute. If you have Medicare, then the doctors you go to need to accept Medicare. So some doctors out there don't accept Medicare patients, and if you're on Medicare, then you would not be able to go see that doctor. So what are some of the benefits of signing up for Medicare? You'll have extra coverage. So if you need extensive and expensive surgeries or treatment, both Medicare and the FEHB will pay towards it. Generally speaking, out-of-pocket costs are quite low if you sign up for Medicare, except for the monthly premium that you got to pay. Now, you'll have two monthly premiums because you have to pay the premium for FEHB and pay the premium for Medicare Part B. Besides that premium, big copays or big out-of-pockets are usually not the case when you have both of them. Generally speaking, people that are risk averse, maybe they're on the more conservative side on their investments, they tend to lean towards signing up for Medicare because they don't want any surprises. They view that as less risky. They want to know what they got to pay, and that's it. Now, we've also found that some people that are a little more aggressive leaning towards their investments may actually decide that they don't want to sign up for Medicare because they want to save that monthly premium by not having to pay for Medicare. If they have to come up with some out-of-pockets or some copays here and there, they're willing to take that risk. The key thing in signing up for Medicare is that there's a 7-month window around your 65th birthday that you need to sign up. So if you're going to, you need to do it. There are 3 months before your birthday, there's your birthday month, and there's the 3 months after your birthday. So if you're going to sign up and you've retired, you need to sign up during this window. For every 12 months that you don't sign up, there's going to be a 10% penalty. If you're working after the age of 65, then you have an 8-month window at retirement to sign up. You'll just need to prove that you've had federal health care before that. Now, when we talk to people about the 10% penalty, that's only if you sign up late. If you come to the determination that you're not going to sign up, you're just going to leave FEHB just like it was, you're never going to sign up for Medicare, then there would never be a penalty. It's only for signing up late. Now, I believe that some FEHB plans give you some type of discount if you do sign up for Medicare, so you'll definitely want to check that out. So ultimately, the question of do you really need Medicare is going to be your personal preference. Your entire career you've had the federal health care, and so you've never had Medicare, just the FEHB. So for some people in retirement, just being able to continue the FEHB is all that they need. Now, we have a lot of videos on here talking about Roth conversions and how getting traditional money to Roth can be wise. When you do a Roth conversion, we are artificially making your income higher than it normally would have been. Now, earlier when we mentioned the Medicare premiums, I said they are based on your income. They're actually based on your income 2 years prior to the year in question with Medicare. If you're going to do a large Roth conversion, then your income can be high enough that it can cause Medicare premiums to go up. If you want more information on Roth, check out this video right here. Can you contribute to Roth TSP and Roth IRA? If you need individualized help, go to ChristyCapital.com, click Talk to an Advisor. My name is Mel Stubbs. I'll talk to you next time.